Hey guys, it's Karen. I'm just going to do a quick market update, going over cryptocurrency, commodities, and equities, indices. So looking at the Bitcoin chart, so explain my short setup that I gave a couple of weeks ago, and I'm still running it. The first three take profits have already been hit, so the last one at 28.9, pretty much the T, because we spoke about how we had that really high volume node, particularly at that 28.9k region, and we effectively rejected off that. So I'm just going to put this up here just to illustrate what I mean. So you look at the chart here, in particular this Bitcoin price action recently, we had this really high volume area around this 28.9k, and we actually bounced and wicked off that. But now we've actually taken a leg lower. So the first three take profits have been hit. So it's a risk-free trade now, just thank goodness. Now I've closed off 50%, and now I've essentially scaling out in a grid here. My next take profit is 28.5k. And I've got various shorts running, so 3 from 31.53, 5.73, 31.436. And of course, I clearly explained to the community that I know several of you took the trade and just letting it run. So now my next take profit is 28.5, and these are just next take profits. I'm scaling out on a grid rather than picking one set target, because very often there's so many areas it can bounce off. And if you notice also looking at this recent price action, you can see how there's an exact trend line here. So looking at this, you can see it seems to be some kind of ascending triangle. If you notice in this price action, and of course this can take a while to play out, but if you notice that here, we've got one touch point here, second one here, third one here. And so we might get a leg down here actually. And what wouldn't be surprising is if we have a move down here, we have this key untapped point of control around 26.8k. If we get a bounce here, and this could be a bounce region, or maybe get a compression like that, and then eventual breakout of the ascending triangle. So that's just something I'm really watching out for. It's just something because it's not necessarily bearish in that sense from a macro point of view, because we've had a huge run up, particularly 100% from the lows here from this year to 31k. And if you think about it, guys, when we were at 15.5k, what was everyone thinking? Everyone's thinking, oh, well, it's going to go to 14k, but it didn't happen. It just front ran expectations. Similarly to here, everyone was expecting 32, 33k, but we only reached 31k. And again, what do you know? We're just front running expectations. So it's so important to stay grounded, and we have the support box here, but it can literally bounce off anywhere. What I found with cryptocurrency and Bitcoin in particular, it doesn't trade as cleanly as some of the other Forex pairs and setups that I've been taking. So you have to take that into account as well, and not really force setups. I mean, if something looks like a zebra, it talks like a zebra. Well, zebras don't talk, but if something looks like a zebra, walks like a zebra, it probably is a zebra. And if you notice, the point I'm trying to make is, if you notice in this price action, we had this. If you look on the forward time point of view, we had a push up, push down. We took out the structure. So this was a break of structure, right? Here, push up, push down, break of structure. And we've been consolidating. But this is essentially a change of character. This was the level of support in this range. And now we've actually broken down. This one, I don't count it because it's a wick. So it's not a close below it. But you can see how we've had a breakdown. And so now the actual uptrend has now been reversed from 4-hour point of view. I explained how this is an order block, so around between 29.8k to 30.4k, and you also have this one here as well. And you've got this, so yeah, this is actually a reasonable one, so 29.8 to 29.6. So you could bounce off any of these zones. You just don't know exactly where it's going to go, and it's about not predicting price and changing and just reacting to structure essentially. And so the only thing is why this is a bit more ominous than the other ones is that if you notice every other time we've had a wick and a move back into the range, but here it's just lingering here, and the more it does that, the more ominous it becomes. So that's just something to also consider as well. And of course, I also explain how we have two untapped points of controls, particularly one here, 26888, and then 31.2k. So the thing is, you've got a couple of options. You might get a move like this. So essentially, you might get a move like so. Yeah, so you might get a breakdown and untap this point. So tap this untapped point of control, then might get a move up like this. But what also would announce situation is that you might get a tag of all these stops, lower high, lower high, lower high, lower high. When a lot of people, especially this late on, you get a final liquidity run, and then you might get a move to the untapped point of control around 31k, and then you might get the flush down. So that's just something to consider as well. So anything can really happen here, and this is why particularly I'm in these shorts, but I haven't moved my stop loss or break even or anything because I don't want to get faked out. And so if you want to scalp particularly, you can notice the particular range. And if you notice this range, particularly here, if you draw a fixed volume profile tool from here to here, we're still well below this, and so you want to get back into the range. And personally, in this mini range, I'd rather take shorts from the upside to the downside, because the lead-in trend is actually in a downtrend. So you don't want to go counter to the trend. The trend is your friend, literally, unless proven otherwise. And personally, there's just better setups, personally in the forex markets and commodity gold markets. So I've mostly been trading that in the meantime, but I'm keeping a close eye on it like a hawk, as you guys know. Looking at something else, so I'm also drawing a Fibonacci as well. So particularly from here, so if you notice from this recent impulse to up here, it's going to change this Fibonacci actually. So we're still, okay, so this is quite significant because the 382 Fibonacci is 29.1. The first often warning sign of the daily downtrend starting is when the 382 is lost, and sometimes you get a move straight to the 618. And generally speaking, in uptrends, Bitcoin really holds the 382 Fibonacci. So we'll have to see where this goes. But this is something else I'm really looking at as well. Looking at some other price action, let's look at just general other markets as well. So gold is something I've been following a lot as well. And gold, particularly, we've looking at this chart. And we had this actual 4-hour downtrend. So particularly, we had this initial uptrend, push down, push up, took out structure, push down, push up, lower high. And this is a change in character because it's take out this low, completely reverse this uptrend. And this was a lower high, okay? I actually caught this long here, and it was a nice trade because we had a move down here and a false breakout. So I explained it specifically in our members. If you're interested in joining an amazing community of professional traders who are constantly talking and networking and brainstorming, please do join the community. I put the link below. But there's hundreds of members, and I know you'll love it. And particularly here, this is a liquidity grab, essentially here, and we move back into the range. And whilst this is counter to the trend, this false breakout trade, it was just such a lucrative trade because it's not even because it can take a while for these trends, these general 4-hour trend to play out. But I actually caught a quick long and I got out here. And so around 1963, it wasn't the top, but it was good risk reward trade. So it was quite a nice setup, really. So let's look at some other markets. And then the GB JPY is something else I'm also looking at. If you notice here as well, we had this general, we had this push up, push down, push up. This was a higher high, in the 4. Then we had a breakdown here. So now we've actually gone up and mitigated this area of supply because we actually went straight past. So you would expect some kind of rejection in the zone. But now we've actually made a leg up to this untapped supply or order block here, resistance here. And so the question is, do we break structure? So I'm planning a short setup for that as well. And once I have more confirmation, particularly on the lower time frames, I will be planning a short for that. But these are just things I'm looking at. That's like the setup of the week, essentially. Then looking at more wide markets. And of course, NASDAQ. But so US 100 is also something I'm looking at as well. You can see how particularly we've had this push up, push down. And we'll have to see if we get a break of this. This was an area of supply here, and we've tapped into it. And we'll have to wait and see how if there's a nice structure change. You can see particularly how very often this can really be a precursor and give clues what Bitcoin is going to do. Very often if you really, really pay attention, if you really do, it can give good clues, particularly. And so this is just something else that I'm also looking at as well. The NASDAQ. I think I haven't shorted it yet, but I'm planning this. SPX. Let's look at SPX as well. The thing is that I know I get so many messages asking, should we short SPX? Should we short S&P 500? And whilst I've planned the setup, I don't want to get in front of a train that's going at high speed. I don't want to force setups. I want it to come to me. And patience is so important. Trading is one of the most lucrative skills in the world. And it is 80% execution and 20% analysis. There's a plethora of information in the internet. And this does not make you money. There's so much noise. The chart tells a story. And effectively here, we've had a run up here, and you can see how structurally this has just been a series of higher highs and higher lows. But I would like a liquidity sweep or liquidity hunt of this local resistance around 4.6k. And once we get a false breakout, like push up down, then I might consider a short trade. But this is actually looking quite strong, actually definitely better than cryptocurrency so far. So that's just something else I'm also looking at. Total crypto market cap is 1.12 trillion, so roughly. So it's just under 1.13 trillion. We've just had a push up and we've had a break, just a retracement here. Bitcoin dominance, particularly, we've had a huge dump here as well. So 13th of July. And you might get some kind of essential, because nothing goes up in a straight line. We were saying how this was essentially a key area of local resistance in this Bitcoin dominance chart. Because if you notice here in this price action, on the way up here in 2018, we actually back test this as a support. And so what support on the way up often can act as resistance, sometimes on the way up as well, later on down the line. And so I would expect an eventual tag of this 58%. It might take a couple of months to play out, but when it does happen, please don't be having a high weighting of your portfolio in altcoins. It will absolutely wreck you guys, honestly. So to be very sensible about this. And of course, ETH. So let's go look at ETH Bitcoin dominance. So ETH Bitcoin dominance has taken a bit of a bleed recently. Let's go in the 4-hour chart. It has been a bit of a bleed so far. It's not as bad, but you might get some recovery here. And perhaps ETH might have a mini bounce. ETH, essentially, so we're speaking about the members actually. So this is the weekly, this is a key weekly level to hold. So 1720. If that's lost, and I think it's very little on the way till 1550. And this was the key weekly open and close, so 1937. So we have to wait and see, do we do we hold that? The thing is, what's interesting here is it does seem as if, there's an imbalance here. So basically we had a huge dump here and we haven't recovered this imbalance. There's a series of lower highs, lower highs, lower highs. So you might think you would get some sort of liquidity sweep, stop hunt, and be clear some of these imbalances and then go much lower. So these are just all things that I'm essentially looking at, guys. And let's also look at the long-short ratio in Bitcoin. The long-short ratio is essentially looking at what proportion of the market is net long. So in other words, are really favoring an upward bias of the market. And naturally, the market does not give what people want. The market is designed to make the majority of people lose and the top traders win. And that's what we're trying to be top traders. We're many professional trainers in our group. And we're networking and brainstorming. But looking at this, you can see how the longer short ratio has gone up. And Binance traders are generally weaker traders. And this means that a whole huge amount of that exchange is net long. And you can also see how the open interest has increased. So this shows that overall there's a net entering of positions, especially by weaker retail traders. So you would expect potentially some kind of dump, potentially. And it's not looking good for people who are net long in the near future, right? So you'd expect a reverse. The top traders actually of retail are actually decreased their long exposure. They've actually gone down here. So it's just something else to consider as well. But guys, this is all I have to talk about today. Do check out my YouTube channel. This is where I explain and really show my passion for crypto. And I really post good market analysis and just tips to really fast start your trading career. Thanks a lot for watching, guys, and I'll see you soon.